You guys don't remind me.
Sorry.
I'm going to start from scratch, right? We're looking at the characteristics of the double top. What symbolizes this double top? This is what, if you just came in now, we're talking about market patterns. Market patterns, these are some of the market behavior, how the market is most likely to move. In combination with what I've already taught you, we're talking about your market structure when the market creates higher highs, higher lows, lower high, creating all these equal lows and equal highs on the sideways trend. Do you know that on the sideways trend, in terms of market structure, the market creates lower lows and higher highs, equal lows and equal highs, and create support and resistance, support and resistance. As you all know how to identify a strong area of support and resistance. When the market touches to a certain area 2 or more than 3 times, that area it's called support or resistance, right? Now we are here on the double top. So the first thing that you need to look at in order for you to identify that this is a double top, we need to have an equal high. As you can see, I've already said it. I said, if you look at this, the market was trending up here. So the first leg right there at the top, that's a higher high. And then when it pulls down at where they written neckline, it's when the market was creating what? What's creating a higher low. When it creates a higher low, at the same time, it's creating a neckline. But in order for us to confirm if this is a really valid neckline, we want the market to go up and create these equal highs and then pulls back to the neckline.
Okay.
Now, I'm going to remove this and I'll try to show you on the market, on the chart, right? I'm going to try to explain it in my own way, but I will try and explain to you in reality what could transpire in the market, because I've always told you that when you tackle the market or when you engage with the market, you have to be what?
Open-minded.
You have to be open-minded because it might not give the same high as what you expect. You got to be flexible, basically.
Thank you. If you're going to be a trader, you need to be someone who's able to think outside of the box. What you learn from the book, it doesn't mean that it's exactly what you're going to get. But what they're trying to do for you, they're giving you a roadmap. Understand? It's like when you are given an address, you punch it to a navigator. You know, the address doesn't really mention that there's portals there, or there's some navigators that are getting advanced now. They can tell you there's portals, there's traffic, but some navigators, some old navigators, they don't tell you that there's traffic, there's what. You don't know all these things. So you need to be able to be open-minded and to be observant as you move, right? So right now, I said to you, we are coming from an uptrend. Let's say the market has been creating. Okay, let me do like this. I'm going to try and give you an example on an uptrend, right? How the market is most likely to do that. So let's say we're coming from a downtrend. The market is creating higher highs, higher lows, higher high, and then higher lows, right? When we get here, they create the first leg. They create what? They create the first leg in the market. I hope you all can see my screen, right?
Yes.
So when they create the first leg at the top, this is our higher high. This is our higher high, right? Guys. This laptop is gonna switch off, eh? I didn't see it. Let's hope it doesn't switch off, because nowadays it has a tendency of that. Once it says battery low, it will just switch off. So we've got a higher high. As you can see, the market was trending nicely, creating higher highs, higher lows, higher highs, higher lows, right? At the end of an uptrend, this is what you're going to see. you'll start seeing the market pulling back, right? Let's say maybe they pull back to this area. They don't completely maybe come down here. They pull back to this area. Then you see them going back to the very same high. But they fail to trade above this previous high. The minute we have equal lows, and we have seen the market pulling back, going to create a higher low, right? You must know that they were going to create a neckline, right? This place is called what? It's called neck.
A neckline.
A neckline.
Yes.
I don't know if I make sense.
Yes.
Yes, coach.
Yes, you do, coach.
When the market reaches the neckline, you see that, okay, we've got equal highs, right? It's your time to know that, okay, before we get to this pattern, right? In terms of the market structure, right? I've taught you about market structure. We are riding on an uptrend where the market is creating higher highs, higher lows, higher highs, higher lows, higher highs, right? And then you see the market pulling back, creating a higher low at that neckline. And then they go above, they go create a new higher high, equal high, right? When the market comes back and trade at this neckline, what does it bring to mind? Based on the market structure that I've taught you.
I would say what comes to my mind would be a retest.
Before that, before we get to the retest.
Okay.
Okay, let me give you a clue what I want you to give me, right? In terms of the uptrend, for the structure to be broken, which market structure we focus on? In order for the structure to be broken.
It would structure to be broken. We look for remember we were talking higher high, higher low, higher high. Now we look for from a higher high, we will be looking for a lower low.
You were coming
low.
You were coming very right.
We're looking for.
Okay.
Are we not looking at the downtrending?
Guys, listen to me. Let me repeat this. We are riding on an uptrend. Okay. The market is creating counter trend on an uptrend. Higher high, higher low, higher high, higher low, higher high, higher low, higher equal high, right? I'm saying, for this structure to be broken, what is it that we have to break? Are we supposed to
neckline?
Thank you.
Higher low.
No, we break the previous higher low. We break the previous higher low. Then there's an indication that.
Thank you. Right? Thank you. That's what I wanted. So now, in terms of market structure, the structure is getting broken. And then I don't know if I've already explained to you, the minute the market gives you equal highs, what does it symbolize? Did I explain to you or I haven't? I did. I did on the market structure. What does it symbolize?
Yes. They're losing momentum for uptrend.
I want you to say
losing momentum.
It symbolizes equality.
Yes.
There is some sort of equality because all along the market has been breaking these higher highs, coming back to retrace higher highs, coming back to retrace higher high. But at the end of an uptrend, we then start seeing the market creating equal. That's why it's called equal highs, because there's the market is starting to have equal momentum. There's equality. Then now, when the market now creates these equal highs and then comes back, remember when they were pulling back and create a higher low, they were creating a neckline. Then they pull back and go create equal highs. Then they start to do what? To trend down. Now, when they break this neckline, the structure is broken. And we already have what? We have an M pattern at the end of an uptrend. That's how you apply this M pattern thing. And I'll tell you one thing. I like to take accountability all the time, right? Part of my systematic BCB trading strategy, I try by all means to eliminate things that they don't help with stuff or technical tools that give us less probabilities in terms of entries, right? Lately, I've discovered one of the biggest mistakes that I've been doing, and that have caused me to lose so much entries. You understand? So even with my other group today, we'll be dealing with it. We'll be rectifying that. I've done my research and I'm done. I've concluded that this is not how it's done. Let me tell you something. When you are trading an M pattern, don't wait for a break and retest. It may never happen. 90% of the time, the market doesn't come back to retest when it is trading with a W. When you're just focusing on the W. But when you are focusing also on the market structure, it's most likely to happen. Because there is markets where there is no market structure. The market just created a W at the end of an uptrend to show you that there is some equality, then the market starts breaking to the downside direction. Right? I'll tell you one thing. I'll tell you one thing how we're going to tackle this thing, right? Once you have these equal highs at the end of an uptrend, and then you have a beautiful and an M pattern, right? All you were going to do when the market approaches this neckline after they created the equal high, we are going to look for some factors of confluence right here exactly at the neckline. What are going to be the factors of confluence? They are going to be our EMA, are going to be our candlestick formation. Do you get my point, what I mean?
Yes, coach.
They are going to be, we are going to drop down. We are going to mark this area and drop down to small time frame and try to figure out on the small time frame what is the market doing. Are they trading lower lows or what are they doing? So as long as it's going to correspond with what we want to find here, then immediately when the market reaches the neckline, we are going to look for an entry. We're not going to wait for a break and retest when we are trading market patterns only. Not when you're trading market structure, when you're trading market patterns. And I'll prove it to you why I say we must not wait for a break and retest when you're trading a market pattern. Right? And then now, here's another reality that you need to be aware of. A reality. Marco, raise the hand.
Can I ask before you proceed? When you say at that neck level, and when sorry about that, and then as it goes down, you talk of the entry. Are we not going to have a pause, maybe stop before you get into the entry? I'm just looking at the previous slide that you were indicating. So do we ignore that part where you say stop and then before you go to the entry?
Stop before you go to entry, as in how?
Or what is it? Or what is it that I'm missing? I just want to get something there.
I don't understand your question exactly. What you're trying to say
on the previous slides that we started with before we come here when we were showing this double things. So you indicated the I think the first one, it was indicating this upswing and the M directions, and then before that it has got a neckline, and then on the down the line that going down, we had stop before the entry. So I'm listening to you. You said when you are at that point now, you are now to start checking on your entry. So what I'm saying is that now, are we not pausing or using that wait stop before we get into the entry, or we just from there, as we realize that now we are at the neckline and just go straight to the entry?
Guys, do you understand what you're trying to ask me?
Let me not confuse you. If I'm not clear, then I'll just listen. Maybe I'll pick up what I wanted to understand.
I completely... Is there anyone who can get her point? Maybe you can explain to me clearly better.
I don't think, maybe I'm with me and Marco, we are in the same boat, because remember, based on the teaching, you previously indicated that after the break of structure, you will be looking for a retest.
Okay.
Now she says she's trying to figure out as to You're saying as soon as the market approaches the neckline, do we immediately strike? What will be the confirmation for us to strike? I don't know if this is correct.
Okay, thank you so much. Listen to me. I got you.
Okay.
I got you. Look at this. Let's assume there's no pattern. There's no M pattern at the end, right? And carry on a normal basis, this is how the market structure will normally go, right? Thank you for bringing that, right? So that you can have clarity. It's a very good question. It's a very good question. It's a very good one. I like it. So let's say the market is creating its counter trend going to the upside. Okay. Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, right? Let's say we are at the end of an uptrend. Let's say we are at the end of an uptrend right there, right? So this is the higher high that we have, and then the market pulls back. The market pulls back to this area. As they pull back, they fail to go and trade above that higher high. Don't get lost, ne? I want you to be with me. Stay with me and focus. So we've got this higher high, and then we've got this higher low right here, and then we've got these high, right? Here's our high. Are we together? Are you still with me?
Yes.
You're not lost. Then when the market breaks the higher low and go there, we will want them to come back and retest, then they continue to go down. Did you get that?
Yes.
Now it's a different thing. There's no pattern that has been created here. It's just pure market structure that we're focusing on. Right?
Yes.
Are we clear?
Yes, coach.
Yes, we are.
Thank you. Then now, let's say, for an example, we've got an M pattern that is being formed at the end of an uptrend. Right? The end of an uptrend. Okay, we've got our higher high. We've got our higher high. Then the market pulls back. Go create a higher low, and then pull back, create a high, then they drop. Can you see that this is a two different scenario?
Yes, we can see that.
It's a two different scenario. We've got an M pattern now.
Okay.
We've got a neckline right there. Right? Are you answered?
Yeah, we do have a neckline, and then continue.
And then once we have equal highs, we've got this M pattern. I don't want us to wait for a break and retest anymore. I don't want us to wait for this thing. The minute the market gets into the neckline, we already have equal highs. The market is breaking from it's coming from an uptrend. We have these equal highs. We've got a neckline. We are going to look for some factors of confluence that I'm going to teach you right here at the neckline. As the market pulls back from the second leg, from the higher high, we're going to look for some factors of confluence. What would be those factors of confluence? It will be your EMA. The EMA must have crossed One. Number two, we must find some candlestick formation. Number two, we are sitting at the neckline. Number three, we are breaking structure. Number five, we are breaking structure. I said I'm going to repeat this. Number one is the EMA. The EMA must cross. Number two, we've got equal highs. Number three, we are sitting at the neckline. Number four, the structure is getting broken. So this will be the factors of confluence that we are going to look at in order for us to get there. We are not going to wait for the market to break and retest. We're only going to wait for the market to break and retest if we don't have these equal highs. But I must tell you something so that you can be aware what's going to happen in the market. It's not always going to be equal like this all the time. Sometimes you might find an M pattern with a little bit of a difference in terms of the high. But that doesn't mean that it's not an M pattern in that case. You understand what I mean? But it must not be this way. The minute it's like this, use your mind, be optimistic. You can see that this is just a higher high, higher low, high, then the market is breaking the structure. There's no pattern right there. I don't know if I make sense.
Yes, you do, coach.
So it should the W at the top, it should make sense when you're looking at it, that this is an M pattern. You must never get confused. I want you to understand me very well. The minute the market gives you equal high and then you see that this is an M pattern, it has broken from the structure, got the EMA, some other factors of confluence that I'm still going to teach you. Don't wait for a break and retest. I've missed so many entries because of this thing of I'm still waiting for a break and retest. The market is most likely that it will never come back to that area and retest.
Okay, coach, just repeat again. 1 is the EMA, 2 is the equal high, 3, break of structure, 4, passing neckline or by the approach to neckline. And what would be the
market is sitting at the neckline. The market is creating some candlestick formation. I'm still going to teach you about candlestick formation. So in this particular area, okay, when the market pulls back to this neckline, right?
Okay.
The first thing that we're going to look at is that we've got equal high. That's number one. Number two, we want the EMA to cross, to serve as a resistance. That's number two. Number three, we are sitting at the neckline. That's another confirmation. Number four, the market is breaking structure. Higher, high, high, low, higher, high, high, low, higher, high, high, low, higher, high. The market is about to break structure. Number five, we need some candlestick formation at this particular neckline. Those candlestick formation will be the language that the market will communicate with us to tell us that are they going to break or they are willing to continue to go up. So the minute you find some bearish candlestick formation at the neckline, that's a sign that we are about to break the structure, we're going down.
Okay. Bearish, it's indication. So you're saying when we approach the neckline, candlesticks should not be playing around it. They should be very clear bearish. Is that what you're saying?
Exactly. You need so
one last question before you continue, coach. Sorry to jump in. One last question. You spoke about the EMA. Which EMA are you using? Remember, we've got the 15, we've got the 200.
I use 50 EMA.
Okay.
I use 50 EMA. Yeah, the settings. Here are the settings of my EMA. I use 50 EMA. I don't know if you can see them, the settings. Guys.
Sorry, coach, before you continue, I'm not sure if everybody knows what EMA is.
It's a moving average.
That line, that blue line there on your chart, ne?
Yeah, it's a moving average. Guys, go and learn how to use TradingView. These things of using MT5, trust me, you'll never be able to analyze the market clearly. If you don't know how to use TradingView, start now. There's no way you're going to start and then you know everything about the TradingView. So start now to learn about the trading view. Start and get it wrong and send it. Like I saw someone in the group yesterday, he sent a question, he say, can I please get help? I don't know how to put this on trading view. Another person replied, and that's how you're going to learn. I never woke up one day and then I knew how to use the trading view. No, I watched YouTube. There's some certain things, guys, I'm not going to sit down with you and say this is how to use a trading view. You must be able to do your own research as well. Use trading view all the time. We don't have time. We're supposed to go to the market and identify an M pattern. We are left with just 1 minute right there. We don't have time. So tomorrow, what we're going to do, we are going to finish up the M pattern on the bottom, and then we just stick on trying to find them, keep on finding them directly in the market and see how the market behaves when it gives us those M pattern at the end of an uptrend. We are done with our session. Have a lovely evening. Some people are still looking at me like this, as if like I'm still going to continue. It is done. Bye. I'll send the recording just now. Go through the recording over and over. Brian, Mr. Brian, I like what you're doing. I like someone who asks questions, someone who challenges me. And Mrs. Marco, I like that. You must always have something to ask. It shows that you are learning. You understand? You don't want any confusion. That's very great. Keep it up. I'm out. Let me love and leave you and go see my student on the next class. I'll send you a recording.
Thank you.
Bye, guys.
Bye.